Let's welcome in our first guest on the show, Jinesh Gopani, Head Equities Axis Mutual Fund is with us. Jinesh, first a sense on what are you picking up, when you talk to your clients, when you talk to some of your, colleagues in other companies. How is the sentiment in the market suddenly changing so fast?
Yeah, hi. If you see the earnings growth number, you will really see what is happening at the ground. Obviously, things are slow. You are having a slower economy. You are in the lean season of the economic activity, and hopefully only after monsoons you will see a real signs of a pickup, if at all it happens. So I think all the high frequency datas are slow. So when we are doing our channel checks, things are not going to have a J curve where demand will just come back in a month's time or in 2 months' time. So it is going to be a gradual recovery. However, at least we see that in some pockets there is bottoming out process happening, and hence if monsoons are good and festive season kicks in well, then I think gradually we'll see the recovery happening, and hence maybe the December quarter onwards you will see is even the earnings growth picking up more on the mid and the small side.
Within what pockets, Jinesh? Morning, firstly, do you see a recovery come by within the broader universe?
No, so I think consumption has been slow for last 6 months. If you see, I'm not talking about discretionary spend, but normal mass consumptions are also slow. So we would see some signs of pickup when the monsoons come, and once it is normal, the rural, which is also under a stress, should see signs of pickup coming up. So that is where we are seeing that from a normal staple consumption piece, we should see pickup coming in next 1 or 2 months.
Right. So, as the first signs of decline came in from the auto pack, Jinesh, do you think the first signs of revival will also only come in from the auto pack?
I think festive season will be a clear signal whether the auto cycle is reversing or no. Very difficult to say. The discretionary demand is very slow unless and until the rural economy picks up in great shape and also urban bounces back. I think it will take some more time for autos to pick up in a big way.
Right, but the first signs will come from there. That's what I'm asking. That what will be the signs of a pickup in economy? Of course, rates can come down, 10-year yields can come down, FIs can probably start to buy. What will be the first signs that you will look for any pickup if it happens soon?
So the first signs would be good monsoons, normal monsoons, balanced monsoon, pan-India, and hence the rural economy will start kicking in. Because at the end of the day, if you really see the rural India, whenever money will come to their hand, they will end up spending. It is not a big savers kind of an economy. So rural India is where you should focus on. If rural India picks up after good monsoons, which we hope, then there will be first signs of pickup happening.
In private banks, what will be your call? Private banks till last 5 years was, like a one-way favorite trade that all funds, all FII, DIIs were doing. Do you think that now changes? One has to be very, very selective in private banks?
One has to be always selective in whichever sector you are investing. So banks who understands the business cycles well, who understands the asset quality issue very well, and have been able to navigate these phases in much better manner as compared to others, then I think they are evergreen stories, because we should not forget India is an underpenetrated market. Still there is a huge demand for loans in tier 2, tier 3, tier 4 cities, and that is where most of the good private sector banks are gunning their growth plans. So I don't think there is an issue in terms of growth. Obviously, the growth rates which used to be at, let's say, 25% can come down to 20 to 23%, given the state of the economy at this juncture. But from a structural point of view, you would need credit growth rates of 12-13% for a GDP growth of 6-7%.
In light of the Fed indicating last night and ruling out an aggressive rate cut going forward, what is it that you're expecting from the MPC? And does it seem like the quantum of a rate cut, if it comes by, could be even higher than 25 bips perhaps?
Yeah, so if you really want to give a sort of a stimulus in the economy, then I think a higher rate cut is important, because that is one of the tool, I would say, which can bring some reversal of the negative sentiments on the ground. But I don't think that is the only tool which can revive economy. Along with that, many things have to be done. So first thing is the general sentiment change, and then bringing in the animal spirits among the corporate world.
Okay, fair enough. Jinesh, going forward now, let's talk about some of the pockets that people have been looking at more aggressively, perhaps utilities, infrastructure. Is that a space you'll be looking at? I know you said selective across sectors, but in terms of thematically, where you expect to see a better chance of potential returns going forward?
So we have some of the stocks in our portfolio and we are evaluating it, but we think unless and until the private capex kicks in, the big move looks difficult. And hence, and whenever we talk to the companies, the expectation is the private capex will kick in only after 12 to 15 months. So we are evaluating, and if we get a stock at a good price with decent growth opportunity, we are participating.
When you talk about a stock at good valuation with decent growth, are you looking at it across sectors, or are you looking at it where, you know, there have been off late a lot of cuts in various companies where a lot of people were hiding out, you know, names like HDFC, some of the market favorites have also started to correct where people were hiding in earlier to try and outperform or not see any major dent in their portfolio. Are you looking at all sorts of companies or companies that have, you know, high pedigree and that have now started to correct?
No, I think the fundamental philosophy of buying into good governed company continues. So we will not like to go down the quality curve. In that, if you get some company at a good correction value, then we'll add up more.
Okay.
Right. Do you think pharma would come into that category now after years of underperformance? Any company that we are talking to is not pointing out towards a recovery, but is saying that in US, at least generic prices are bottoming out. In India, they have started to see a pickup in branded sales. How would you look at pharma sector?
So I think pharma means again it is very stock specific, because different companies have gone through a different business model. That going with an ANDA approval and getting growth is over. Every company will have to chalk out their different business plans, and if you really see, many companies are going into biosimilars, some are going into specialty complex products. So I think they are in a transition phase. Maybe not next 12 months, but I think over a 2 to 3 year view, I think growth should bounce back, having seen underperformances for last 3 to 4 years. So very stock specific, we are evaluating in them.
Whenever pharma will bounce back, whether it's this year, next year, or after a couple of years, the returns will be sharp. Are valuations so attractive?
Yeah, so see, normally companies which used to grow at 15, 20, 25%, they have all come down to a single digit growth rates. And also if you really see, the ROEs have also collapsed from high 20% type of levels to single digits. So whenever the growth comes back, maybe 6 months, 12 months down the line, and the improvement of ROE is seen, we should see a smart bounce back in them.
Okay, Jinesh, great to have you on the show. Thank you so much for taking the time out and analyzing the market mood for us.
Pleasure.